Good day, ladies and gentlemen. Today I'm going to be teaching you the difference between an order block and a breaker block, and also you would get to know which one is more effective. Alright, so let's dive right into it. Now, the very first thing you need to know is that an order block is simply a level from which you can either buy or sell. Okay, so if it's a bullish order block, you are looking to buy from that level, while if it's a bearish order block, you are looking to sell from that level. So what exactly is an order block? Okay, I'll start from the bullish order block. So a bullish order block is simply the last bearish candle. Okay, it's simply the last bearish candle. Let me draw within this boundary. It's simply the last bearish candle before an impulsive bullish move. Okay, before an impulsive bullish move that even goes to break structure. All right, so it's the last bearish candle before an impulsive bullish move. So this level right here is what we call your bullish order block. Okay, and that level is depicted by the boundary of your last bearish candle. Okay, so it's depicted by the boundary of your last bearish candle. So this is your bullish order block. And what does it do? When the price returns to this level, when market returns to this level, when it taps into this order block again, you are expecting a bounce to the upside. So you're expecting a bullish opportunity in order for you to enter a buy trade. Okay, so that's for the bullish order block. It is the last bearish candle before a bullish impulsive move that goes to break structure. Okay, that's very important. It has to break structure for it to be a solid order block. Okay, so what about the bearish order block? The bearish order block is simply the last bullish candle. Okay, the last bullish candle before a bearish impulsive move that breaks structure. Okay, the last bullish candle before a bearish impulsive move that breaks structure. So this level becomes your bearish order block. And what is the task of that order block? You're expecting price to come back into it and give you an opportunity to enter a sell trade. Okay, so now that we've gotten that figured out, the question remains, what then is a breaker block? Very easily, people do confuse this concept, but it's very simple. A breaker block is simply an order block that has failed. It's as simple as that. Okay, so a breaker block is an order block that has failed. All right, so let's say you have a bullish order block like this. Let's say this is a bullish order block right here. I'm trying to draw within the boundary of that line. So this is your bullish order block, and then you had impulsive move to the upside like this. So you're expecting that when price returns to this level, it will give you an opportunity to buy. Okay, but instead of giving you an opportunity to buy, price breaks through that level as if it does not exist. Now what you are dealing with is a breaker block, because price has broken through your order block. So how do you handle a breaker block? You handle a breaker block in the same manner as you handle an inverse fair value gap. So since it is a bullish order block that is supposed to give you an opportunity to buy, once price has broken through it, automatically it should give you an opportunity to sell. Okay, so it's now a breaker block. Now how do you handle the breaker block? You are going to wait for price to come and retest this level, okay, which is now a breaker block level. All right, then give you an opportunity to sell. As simple as that. So this is how you use your breaker block, and I've explained how you use your order block. The reverse is the case when you're also dealing with a bearish breaker block. What we have here is a bullish breaker block. What we have here is a bullish order block that turned into a breaker block, a bearish breaker block. All right, so don't confuse the two. Just understand the concept. You don't have to know all the words or all the terminologies in your head. Just know that if you have a bullish order block, once it is broken, it's going to give you an opportunity to sell. Price is going to retest that level, which is now a breaker block level, and give you an opportunity to sell. Whereas if it were to be a bearish order block, of which you are looking for an opportunity to sell initially, then price breaks through it, definitely it will give you an opportunity to buy. As simple as that. It's going to retest the level and then give you an opportunity to buy. Okay, so now let's talk about which one is more effective. When it comes to effectiveness, it all boils down to the kind of trader you are. That's the truth. Okay, it all boils down to what the kind of trader that you are. There are a lot of traders that they prefer dealing with something that has failed. Probably it has failed them so much, so they feel it has a high probability of failing, so they want to deal with the failed system, which is like a breaker block. So once they draw out their order block, they are not looking to take a trade from that order block. No, they want the other block to get disrespected. So when it's disrespected, that's when they want to enter. You understand? So they are trying to enter off of a breaker block. There are people that even fair value gap, they don't trade the fair value gap itself. Instead, they prefer the fair value gap to get disrespected first, then they'll enter the other way around. You understand? So that's the same way this is. All right, that's the same way it is. No one is more, I can't say anyone is more effective than the other. It's all about the kind of trader you are. Do you want to only wait for a disrespected order block which will turn to a breaker block so you can enter, or do you want to enter on the order block itself based on your own analysis? You understand? So basically I'll just go over a few examples to show you how this actually plays out. Okay, so let's take some examples. So look at this right here. I want to zoom out a bit. Let's see, where do we have an order block? I think we have an order block right here. Look at this. This is another block. I'm trying to figure out if that if this level broke a, what's it called, if it broke structure, and I've seen that it broke structure. So I don't want to pick a wrong order block, because it's not everywhere you have impulsive upwards movement that you go and take a trade off of as another block. Okay, so there are some things that make another block high probability of holding, and one of those things is that it has to break structure. So look at this right here. This last bearish candle, can you see it? Let me change the color of this my arrow. Okay, so this last bearish candle right here, before this bullish impulsive move that broke this structure, okay, that is another block because it broke structure. Okay, it went above this level. All right, so you just have to mark out the boundary of the other block. Let me zoom in a bit. Okay, mark out the boundary of the other block, the top wick and the bottom wick of the other block. Now you just wait for price to come back into that other block, then you look for an entry opportunity. As you can see, this is an opportunity for you to actually enter a buy trade, and you can see it played out. All right, a lot of people that teach this order block, they don't teach it with the break of structure. They just say last bearish candle that's what's it called, that is followed by bullish impulsive move. You need the impulsive move to be strong. That's all. No, the impulsive move must break structure. That's what will give you an extra confidence that there are a lot of buyers around this level, because for a structure to be broken, it's not easy. It requires some kind of strong momentum. Okay, so you have to check to see if it broke structure, then it makes this high probability. Another factor that also makes it high probability is there should be a fair value gap close to your close to your structure. So the fair value gap will also attract price. Okay, as you can see, this is an A plus order block because it has a fair value gap attached to it. Okay, so this is nice. That's how you use your order block. Now this is another order block right here. Look at this impulsive move that did what? That broke structure. Okay, so your last bearish candle there is an order block. All right, so place this as another block like this. So let's see if it's going to be respected or disrespected. Okay, all right, so look at this. It was disrespected. So what does it become now that it is disrespected? Instead of giving us a buy trade, it just gave us a little bounce and continue downwards. So what does it become now? It is now a breaker block. Okay, so now people that love breaker blocks will wait. They will wait for what? For price to come back to this level in order for them to enter a sell trade. That's their own system. Okay, So let's see what happened. Look at this. Price returned to that level, respected it this time around, and gave us an opportunity to sell. So it is now a breaker block. All right, so you can see price went into it again and still gave us another opportunity to sell, okay, to the downside. So basically that's just the difference between order blocks and breaker blocks. I hope you had gotten some value. I hope you have gotten some value from this particular video. If you got value, please subscribe to the channel and turn on the notification bell. If you would like to get the master strategy, it's available. All you just need to do is click on the link that I'm going to leave in the comment section and reach out to me. Okay, so basically thanks for watching. I'll see you in the next video.